Good morning, or I should say good afternoon. How's everybody doing? It's afternoon on the East Coast, of course. All right, let's see what's going on with the market. The pros versus Joe's indicator is still not looking super bullish, just FYI. But all right, so let's talk about other stuff. Let's do this. Okay. Now that's the look at this candle. This is a daily candle, but right now it's forming a doji, which is where there's just a little body in the middle and a huge tail on either end. But anyway, total like kind of like right here. That's one. A sign of indecision or bulls. At least the bulls aren't in charge and the bears aren't in charge when there's a doji. At least on in that time frame. So, but let's scoot down to like a lower time frame. All right. Well, I mean, the SPY is still bumping right up against highs. Let's look at the Qs. The Dow Jones is well over its all-time high. I saw the Dow at 50. I mean, the Dow's above 50. Anyway, the Qs are still a ways away from their all-time high. And I'm just going to say it because so in case it comes true, I can claim credit. But I just think the SPY stalls out here. I think Friday we closed lower than we are here. In fact, I'm going to go to Kalshi and bet it. I'm going to go to Kalshi and bet that Friday we close lower than we do. Those binary options at Kalshi are kind of hard to play, or they're because you don't have convexity. You can't get convexity in a binary option. It's either worth 1 or 0 at expiration. You can't buy something. You can't buy something at a half, an option at a half, and run it to $3.50 or something. That doesn't happen on binary options. All right. Well, but yeah, I don't think this market looks that good. Let's look at IBIT. I mean, I've been saying that forever. It's been a terrible start to the year so far. It was a terrible last quarter last year. Anyway, so yeah, IBIT doesn't really look any better. It's down another point today. Of course, that's how you trade Bitcoin, or that's how I trade Bitcoin. In fact, full disclosure, I have on an IBIT play, and I'm in my target by this Friday is 35. Now, yeah, that's probably a bad trade. I don't know, but I just don't like the way IBIT's looking, the way SPY's looking. Let's look at gold and silver. Good job, gold. Well, it's down a little bit today, but it's good job this week. And this week and last week, we've been rallying. Let's look at silver. Silver bounced off the low, from Thursday and Friday. They made a low and bounced. However, today's action is looking pretty poor. It's on the low of the day and down 3.8%. Great job, silver. All right, let's look at the divas. Yeah, Dow's up. Dow's incredible. The Dow is incredible, but it goes back to what we were talking about all the time. I say at least 5 times a week. It's all about value stocks now. Last quarter, it was all about gold and silver, and it was AMD, Google, gold and silver last quarter. Right? Basically, and then when the tech started crashing, and gold and silver started crashing, now it seems to be all about value stocks, and the gold and silver stocks are still in the top of the daily factor. But in energy, now it's energy. Some gold. Well, there are some gold and silver. There's one gold and silver that's still in the top 20 in the back. Whatever. But it's energy. It's energy and it's energy and value. Things like dog. All right. Speaking of dogs, blocks is only down a quarter point. That's not too bad. I mean, I'll take it. Let's see. Speaking of dogs, let's see what ULTY is doing. ULTY is down 42 basis points, although ULTY has been doing pretty well lately. I mean, just looking at the chart, it doesn't look too bad. But as soon as the market craps on itself, it'll go the other way, of course. But it's just the way it goes. As long as the market stays bid, it should stay steady. All right, ULTI. Now, this one has been particularly good lately. Now, it's down 4.3 today. Look at this. Well, that's a 30-minute chart, but let's look on a daily chart. Well, it looks like we gapped over, or we gapped up and then gapped back down through the same gap. Well, that's on the 30-minute chart, actually. On the daily chart, it doesn't look so bad. That's the daily chart on ULTI. Let's look at the daily chart on the others just to get a ULTI. See what I mean by that? Doesn't look that bad. It's doing it's doing better. That the addition of blue chips helped, I think. Let's see, and then let's check out blocks. Now, yeah, that's not too impressive looking, but of course this is crypto related and ULTY decryptified. So for the most part. All right, so let's look at old K yield. K yield is down a quarter point. So the divas are all down this morning. So let's look at this. So here we have, are there none of these declare on Tuesday? I didn't have any declarations last Tuesday or this Tuesday. I thought we had Tuesday declarations. I guess it's all Wednesday. So let's see here. So last week, okay, 26, 27, 28. So here's Wednesday, the line I lit up. And of course, it's ULTY, K yield, WPay, QLDY, LFGY, GPTY, DIVY, or not DIVY, gosh darn it, Chippy DIVY, yeah. That'd be I wonder if someone's got that name reserved yet. Divvy, DIVY. I mean, it's or you could also do yeah, Divvy. Divvy might be a fun name for one of these high yield funds. Divvy. All right. It'd probably be a better name for a stock fund though, because these aren't really dividends. These would be called distros, or I don't know. It wouldn't be really a divvy. All right, and then we have SPY and Qs. Okay, so as far as the daily percent change, let's look. It should look pretty. The action should look pretty muted today. I know that's hard to see, but you could see over there the action's really muted. The one that's up the most is LFGY. Down the most is ULTI, down 4.3. Of course, it was up 10 yesterday. I mean, but, live by the sword, die by the sword. That's what they always say, right? All right. Oh, Divvy exists. Okay, Marcus. Well, whose fund is it? I guess let's look at FitBiz. Let's look at FitBiz. I just hadn't heard of that one. Sound Equity Dividend Income ETF. Heck yeah. Heck yeah. It's good looking back to the value. I'm just assuming, since without even knowing anything else, it's a dividend ETF. Dividend ETF has the name value written all over it. Companies that pay dividends are generally value companies and not growth companies. So, yeah, let's go look and see who's in it. Look at that thing, GSK, Omicron, and yeah, GSK before the start of this year was, it's definitely, these are value plays. Something we didn't even hear about these last year, and they're popping up. That's Energy. Enbridge, I believe, is Energy. Citizens Financial, banking, of course. Citigroup, UPS. Yeah, these are not growth stocks. These are. Well, what does this darn thing pay? It's only 3.22%, but for wealthier folks or folks that don't need as much income or whatever, and you want to, heck yeah. I mean, what does SCHD pay? I think about 2 or 3. I think about the same. So this is kind of in that. I mean, it pays like 3 times what the SPY does. Let's compare it to the SPY. That's a good looking fund. Div Y to this. Yeah, the SPY pays like 1.5. So, well, it's about 2.5 times what the SPY pays. And of course, I mean, the SPY does a little bit better than that. Okay, but let's compare to CHD. Growth hasn't been in lately. You see, the SPY the SPY's growth mainly, but this thing is not growth. You can see this went straight sideways while the SPY was going up until growth started, or until value started taking over. All right, so let's run this against SCHD. And there's another really good one. What is it? It's DIV. It's in It's in the max factor. It's in the daily factor. Yeah, I mean, there you have it. There you have it. Two good looking funds. All right. I haven't not made Taz or Jeff. I have not made a video on those yet. What, you know, I used to make videos when stuff first came out, and I still do if it's heavy on option strategies, but that was just pretty basic. Just use a little bit of leverage. So what I will do is wait till they've been out a month or something, which they probably have been now, and I'm trying to do videos, and then I can compare them to other stuff and and show how the strategy's been working and that kind of stuff. So I will do something on it, but I haven't yet. Right now I'm mixing that video I showed you guys yesterday. It's basically done. I think I'm going to release it at 3 today. I'm having AI work on the thumbnail right now. But that's going to be a good video on ISSB and ISBG. And I asked the question, I've been talking to David, and I'm trying to get the answer on when they're coming out with stocks and gold, because not everyone's a Bitcoin maximalist, or some people, even if they believe in Bitcoin, maybe they are already overloaded in Bitcoin like me. I mean, right. So speaking of being overloaded in Bitcoin, let's go see how BITK is doing. I haven't really checked in on this one in a while. Actually, I'm trying to think. I think maybe I was going to sell this, but I'm trying to think if I pulled the trigger. I'm pulling up my account in the other thing right now. But let me plus let's see how I'm doing. Oh gosh, I haven't looked in a couple of days. See how the model portfolio is doing. I mean, with Alti and blocks, blocks not really, but with some of my funds that are doing better than they were a couple of weeks ago, I would think. I was up 5% for the year, and then I swung it down 4% or something. I had like a 7, 8, 9 point swing, even with my inverse fund and even with my ATTR. Anyway, it's broken right now, or it's whatever. All right, so just so I don't forget to say it later, remember this is not financial advice. Consult a professional financial planner, please. All right, why does this look like? There it is. All right, that looks much better. So what is this? I'm just messing with some settings. So if something screws up, oh, that's cool. Huh. I wonder, there's all kinds of, I really should just do this. I mean, I need to start doing this. There's no reason that you guys need to look at me, and the screen's bigger this way. I need to remember to just keep doing it that way. Okay. All right, guys. Well, so let's look at stock tools, and then you guys can get out of here. I need to go back and finish this video. The only reason it's not out yet is because I had a question and I had to email David, and he hasn't got back with me yet. I need a little clarification. It was supposed to be out at noon. Now it's going to be out at 3. But I'm really excited about getting it out. It's going to be the best video I've done in a while, or the best interview I've done in a while, because I actually prepared for it really well, wrote down questions, and they were really well prepared too. And they had an agenda on what they wanted to talk about. So we had a real productive meeting. So where would I be if I was stock tools? I guess I'd be here. I'll put it over there. I will put it over there. I'm not going to forget. When was the last time I forgot to share the screen? It's been a while. It has been a while. Oh my gosh, it's in the wrong. So this computer I just want the profile that says max. You click on the profile that says max. Why doesn't max go up? I mean, I just did that. I don't understand that. Okay, so let's just go to the dashboard. All right, let's check that out. Let's do like that. Start it. I freaking really don't like this computer. It sucks. I mean, I'm slowly realizing the thing that makes the MacBook Pro so good is the touchpad. This touchpad is the best piece of physical equipment that's ever been invented. And I mean, once you're used to that, you can't, I mean, a mouse will never do. And I can't tell if I'm showing you guys the screen because I can't get to wherever the window is that the broadcast is open in. No, it's not that window. I just can't believe Apple sucks so bad. All right. They didn't used to. I guess I should have just got you guys can't see. I guess I should have just got a MacBook Pro. It's nice to have a desktop though, because it can run all the time. It's always set up. I sit down, everything's plugged in. It doesn't move. I mean, there's advantages to the desktop, but as far as using it, it just it sucks. All right, so stocktools.app. Dashboard. Like Marcus was saying, the Dow is up. It's up 0.5%. It's above 50,000. It's 504 even here. UVXY is up, and that's why else I think SPY stalls out here, because the pros over Joe's indicator indicates people are still hedging. I mean, and that doesn't always work, but I just, and then when you add in how bad Bitcoin is doing right now, and I mean, and then you add in the Qs are lagging the SPY, like, it's just not a great sign. Well, you watch, by the end of the day, we'll probably be at all-time highs. Just, I mean, but I don't like the looks of it. Even if we do that, I think it's a short or a sell. All right, so today it's utilities. It's all about utilities. That goes to value. Consumer discretionary are also up. Materials, real estate. Okay, so those are more on the value side of it. But then you have energy's not doing well today. But then you have tech and usually tech and discretionary are kind of leading. And you could see discretionary right now has bearish momentum. Now let's go down to tech, which is XLK. It's sideways today and it has neutral momentum lately. So if sorted by momentum, the momentum lately is in real estate and industrial and energy and staples. All right, so let's go over here and let's see how these individual high yield ETFs are doing. And we can look at that. I'll do that. Hey, Chef, I'll do Divvy versus Dog. That's a good one. Yeah, that's a good one. And I'll do, Indiv. That wasn't the one I was thinking of, but there's one called, but that is a good one. There's another one that's called like Div S or something. And you guys like it. I think you guys told me about it, or it's in the Max Factor right now. But yes, it has the word div in it, but I don't think it's that one. I'm not doubting that's a good one. The Indiv's not a good one. But I'll remember the one that you guys told me about last time. I put it right on the Max Factor because I looked at it. It's blowing away the SAHD. It does a great job. I'm sure this one does too. We'll look at all those in a second. Let's see what's going on a one-day basis. I guess I never did look at BITK. I was trying to figure out if I even had it because I kind of remember dumping it. It wasn't very much. Yeah, I think I did. I did dump it, and that's good. I'm fine with that. It wasn't very much. I need to do so. I need to make some content on my portfolio. But anyway, let's get this quantify one out of the way. All right. So on a one-day basis, it's all about what is MTYY? What, are you kidding me? Are you serious? Is strategy really up again? You've got to be kidding me. You have got to be kidding me. See, like here's an example. I want to slide over and show the thing really quick, which would be easy on a touchpad, but all right. There's no way this one's up. Gosh darn it. I freaking hate this thing. Man, this sucks. There's got to be a keystroke where you can swap between windows. There's got to be a keystroke. Okay, so there's probably an Apple guy in there. Marcus, you're a graphic designer. You probably know about apples. I mean, I used to know about apples. But I guess I know about MacBook Pros. I just don't. The Apple desktop, it's not the same. All right, so this doesn't look, is that really, I thought this thing was up 25% in a day. Yeah, I guess that was up 20. You just can't even tell by looking at that. Would you think there's a day on there with a 25% change? I wouldn't. But this day we went from 106 to 135 or 34. Holy cow, and that's 25%? Because yesterday's move looks like it may have been, well, 2 or 3% or whatever. And then today we're actually down a little bit. But I mean, our strategy's down a little bit. But but MTYY, they're selling leveraged options. These guys don't always, they don't always follow exactly the underline. Well, this is saying down 5, so that was fake news. So now I got to slide back. I could slide that way, but I cannot slide the other way. So MTYY is up 8%. What are they talking about? I don't even know how to check that out. See, and that happens all the time too. This just freaking sucks. Just making me appreciate my Windows machine. I never had this much problem on my Windows. I mean, you got to switch windows all the way around on my Windows laptop. Just boom, 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 bring them all up at the same times. All right, so I forgot I was going to look at it because I'm mad about this. I'm mad about this machine, and so now I have to scan back to remember what I was talking about. But yeah, MTYY is what I was mad about. Why is it showing that it's up and it's down here? Did it just have a dividend? No, it had a dividend on, well, it declared, it went X on Friday. So it had 17 cents removed from its price between Thursday night and Friday morning. So no, that is not it. So I don't know why it's saying it's up. Anyway, sorry about that. Sorry about that. It looks like maybe this is down or something. Okay, no, it's not down, but that's just yield max. I wish it would just default to everything off the get-go. It says select all, but it's just yield max the first time. Anyway, so I mean, I guess MTYY is not up 8%. So who knows if any of them are up. But since it's Rob's programming and not mine, the rest of them are probably right. If this is my spreadsheet, every one of them would be wrong. But Murney, I want to just check and make sure it's right, but it's not worth the trouble. So TSLW beating Tesla. Murney's probably right because it's been doing well lately. TSLW being Tesla. That's believable. I knew to call BS on this. That just didn't look right. I was going, how's that up 1%? I mean, 8% when the parent's down 1. Anyway, I knew that was wrong. Snowy is doing well, but it's underperforming. TSLP doing well. NFLW, of course, outperforming the parent. Then we have DIZZO, MSFW, NFLP, AMZW, TSMY. So out of these stocks, Murney's definitely a value type situation, but Tesla really I wouldn't call value play. But some of these other ones like Disney and Snowflake, Netflix, at least compared to something like something like a Palantir, they're more value based than a Palantir. Let's see what the worst ones are. And I bet you they're all the really Ethereum, Bitcoin, Ethereum and Bitcoin, of course. But let's see. Okay, Google, Baggy, Beto, QDTY down 1.5, BCCC, that's Bitcoin, Roblox. So it's, I guess what it is pretty much everything in the high yield universe is growth to some extent. There's not really, I mean, they have Berkshire and they have the real estate fund, but there's not a lot of way you can get exposure to value in these high yield things. Okay, so let me do some of these things let's talk about some of this stuff you guys want to talk about. Okay, yes, no, NDIV, I think it was SDIV, or no, I think it was SDIV is what it was, Marcus, that you guys gave me, or DivS or something. I think that was it. Now that I'm thinking about it, anyway, that one, SDIV is in the max factor, and as well it should be because it looks good, but we ought to put NDIV in there as well. I got a list today from a friend with some more ideas on closed-end funds, about 10 more. So when I add those 10 closed-end funds, we'll throw in SDIV and NDIV, and we'll also do. I'm getting to you, Jeff, and let's look at maybe dog versus SDIV. Just comparing value investments. Dog, so these are dog versus SDIV. So SDIV looks better there. Let me look at SDIV right here on FinViz. Now this is from Amplify, according to Marcus, or no, Global. I thought you, oh no, that's the one. Yeah, that's from Global X. Marcus was the NDIV. Okay. So this is Global X. Yeah, the super dividend fund. Yeah, you guys gave me this one. One of you guys, it was probably you, Marcus. I heard you guys talking about it. So I threw it in the max factor. But this one's paying 8.78%. You know, I mean, it's a tax on the future upside, but I mean, it's, you know, this one's only paying 4%. You know, but the NDIV is related to natural resources. Okay, well, natural resources tend more towards value also. So, I mean, that's, you know, that's a good way to play the resources play if you can get by on 4%. So, or if that helps you out, it wouldn't be enough for some people. Look at all this. Look at this. So it looks like they had to create, which is where they have more buys than sells. These don't trade on supply and demand. When there's more buys than sells, they just print up more shares for you. When there's more sells than buys, they just take your shares, destroy them, and give your money back. You can't short squeeze an ETF just because they can print more of them. It's like the dollar, I guess, or I don't know. It's a different concept than that. Okay, but it looks like they had 20 million come in, or the entire fund is worth 18. Okay, well, so the money that came in was they had 10.17 million come in. That took in one day, back last September, it took their AUM to 21. And then a few days later, it was sold. I wonder if it was a dividend capture play. I wonder if somebody was trying to capture the dividend. I mean, that sometimes that happens, but I wouldn't think that would, on a 4% dividend, I wouldn't think that would be it. Was anything going on last September right here? I mean, it's interesting. All right, so SDIV, NDIV, and let's go and let's compare dog to SDIV if we haven't already. I think we did. Okay, let's compare dog to NDIV. It's NDIV. Yeah, I mean, let's. So back on, I already forgot on NDIV and SDIV who won. I already forgot who won again. NDIV and all right, NDIV won. So that's the one that pays 4%. Okay, well that makes sense because the SDIV pays twice as much. So let's look at the NAV. SDIV's NAV went from 24 to 26. I mean, it was up $2.07 if you add in the cents. InDiv, on the other hand, NAV was up $6. You know, so it's NAV does on about the same amount of money. InDiv's NAV did approximately twice as well as SDiv. SDiv's yield is not twice as much as InDiv's, because if you look here, well, this is over 3 years. Let's look at it over 1 year. Let's check this out over the past year, so we can really see how they're robbing from Peter to pay Paul. And I don't mean on purpose. I mean just, but you know, let's see what kind of. Let's see here. All right, InDiv. Okay, so SDiv, the one I picked, of course. I'm just joking. I didn't really pick it, but SDiv is doing a lot better this year, and in April didn't pull back as much. You can pull back a little bit less, but both of them did well. I don't know. I mean, InDiv pulled back. It looks like nearly 20%. So I mean, that's, you know, SDiv pulled back. It looks like about 14%. But in any event, SDiv has paid $2.30. InDiv's paid $1.51. So it's not quite twice as much. SDiv gives you a higher dividend, but InDiv does slightly better. Well, now InDiv doesn't even do better on NAV over this time period, just because because the underlying has done worse. Other things being equal, if these were based on the same underlying and you have one of them paying you twice as much, the other one's almost always going to do better on NAV. These are like apples and oranges, because these are natural resources dividends versus probably growth dividends. Let's see what's in SDiv. I'm kind of liking SDiv. I mean, SDiv might be nice for a barbell, because I mean, 8% is pretty good. I mean, it's almost 9%. Now the 5-year performance is -31. That's not really good, but if you look at the 5-year, that's the NAV performance, down 31%. The total return is flat. It's up 2%. So the difference is the dividends you received over the 5 years. 3-year return, it's only up 3.5%. Of course, these are growth stocks. Growth's been out of favor lately, and these are dividends. It doesn't only happen with covered calls. Stocks that pay dividends also have capped upside, because they have less resources available to invest. They cap their upside in different ways. You know, they don't physically cap their upside like when you sell options. But when a company is declaring a dividend and paying a large dividend or buying back shares, to me, lots of times it means the company's no longer a growth company. A growth company is not going to do that. Apple's turned into a dividend company. But back in the day, Apple was putting every penny they had into the iPod, into the iPad, you know. But then, as they become more mature, then they can start paying a dividend. You wouldn't really call Apple's upside cap, but its upside isn't as bright as it was 20 years ago. Is my point. All right, so yeah, how about ICAP? That's a good one. Let me see what you guys are saying. Divvy versus Dog is a great matchup. Yeah, did I do that one? I forgot if I did that one, because we got on SDiv and stuff. Okay, Divvy versus Dog over the past year. It's all about Dog, and Dog protected capital a lot better. And yeah, over the past year, and let's see who paid out. And Dog paid a higher dividend. Dog is like free money compared to Divvy. No such thing as free money, but Dog is, you know, giving you, compared to that one, it's giving you more of each. Well, let's see if it has. Dog is up $2 on NAV. They're both up about $2 on NAV, $2 or $3 on NAV, but Dog is paying you a higher dividend. Okay, so ICAP. Let's look at ICAP. Should we compare? Well, first of all, let's look at ICAP here. Look at SDiv. Look who it's held by. OR. And I know a lot of you guys like OR. There's SDiv. And what a great, well, OR. Huh, okay. I didn't know that OR had SDiv. ICAP. Infrastructure, capital, equity. Gosh, this sounds like a darn closed-in fund with the word infrastructure. But no, it's ETF. I'm just joking. A lot of those closed-end funds are on different type of business models, like loans, and they're more like bonds. Um, they're on, infrastructure loans, material. It's a different kind of, usually you don't really see closed-end funds on like growth or really, not that the closed-end fund can't grow, but generally they have different business models, different types of companies they follow. Anyway, okay, this one pays 8.62%. Now let's look at its 3-year performance. Its 3-year performance without considering the dividend is up 4. So of course, if you put in the dividend, its 3-year performance is 10. So the difference between those two numbers is the amounts of dividends that's been paid. Pays a monthly dividend. For the year, it's up 8% on NAV and 17% on total return. If you subtract 17, and that's really 9, so it's about 8. That means the difference is literally the dividend. That's all it is. It doesn't always work out exactly to the penny because it depends if it's not exactly a linear equation, but that's pretty much. I mean, you have NAV, you have dividend, and you have total return. So yeah, ICAP's a good one. Let's compare ICAP to these. Let's compare ICAP to dog. Or let's compare ICAP to the one that also pays 8%, which is SDIV, super dividend or whatever. All right, so this is just over the past year. But, okay, so let's look here real quick. All right, well, obviously SDIV is doing better. I was trying to see what kind of dividend ICAP paid. ICAP started at almost 27 and dropped to almost, or went up to almost 29. So that's at $2 going up. Anyway, but SDIV, that paid the same dividend because their underlying was better, was able to squeeze $5 of NAV upside out of it. So SDIV looks better compared to ICAP right there over that time frame. But ICAP doesn't look bad. ICAP, Marcus is informing us that ICAP is like global CGDV with leverage. Okay, well, I'm sorry, Jeff. SDIV or down. Well, let's think about that. Let's think about that. Let me look. Let's look here. SDIV or dog. Let me look here again at a couple of things. I mean, okay, so over the past year, obviously SDIV has done better, but dog has really turned up lately. I'm trying to see if there's a compromise. I'm trying to see if it depends if one of them pays a lot more. It looks like they're pretty dang similar. That looks like a toss up there. So I would say, here's what I would say. I would say I like the dogs of the Dow strategy. It's a cool strategy. It reconstitutes itself once a year. Every year you get new stocks. So every year it puts new value stocks in. It's mechanical. I like mechanical stuff. I'm sure SDIV is good too. That's a toss-up. There's all kinds of books on dogs of the Dow. You could do the dogs of the Dow strategy yourself. Best free money Marcus has ever seen is in Will. Okay, yeah, let's check Will. Let's check Will against SDIV. SDIV is kind of giving the appearance of free money. Well, look at that. So SDIV beats Will there. Now, that's just over the past year. Let's go back a little further. Going over the past year is not always fair. Let's go, especially if something has a 4 or 5 year history. So yeah, Will is over 2 years is up 16%. What about old WW? Let's compare. Now I'm going swerving into the other lane. Let's compare Will to WWI or WEEI, the energy-based infrastructure fund, which has been hot lately. And Will spanks that one and protects capital better. Heck yeah. I'm just trying to think of good. What does Will pay? Let's think of a good comparison for it. So Will pays, it pays like 12 or something, right? So we can compare it, lots of stuff to Will. Lots of stuff to Will. All right, anything I missed in here, we can gladly talk about. Yeah, I'm sorry I don't have any. I mainly, Jeff, I mainly try to cover the things that I know about that you guys don't know about, or that I don't think, that's maybe so. But I may try to cover the new, lightning spread. Oh, he's doing this and something like that. That's something that you guys know. You guys have been, all of you guys like that and have already bought it. And so I figured I tried to break the news. And really, when I took a month off, I got behind. Marcus sends me stuff. A lot of you guys send me stuff. And, so I mean, I still haven't done anything on Mimi and Mago yet, and I really like that. I still haven't done anything on Ono. I actually did a video, but I never did release it. So I need to get caught up on my things. So I don't know if I'll ever really do much on those two, but I'll tell you what we will do. I need to since so many people have those, we need to make a second gen. I need to make a new, get AI to help me make a better buffer report. And I like the buffer report the way we have, because there's too many funds to cover. I mean, I don't want to put all of them in the what's it called, the diversified divas. I like to keep that just kind of the handful of like really ones that are like that. But really, I need to I can make a large database of probably 20 or 30 SPY and Q-based things like we have on the thing. We do need to track those every day. I mean, I'm definitely interested in those. And if I find out something new, I'll definitely make something that anyway, TSYY is free money and recovered the past two. That's great. So Tia, that is great. I'll love to hear that. Let's look at some TSYY. Does anyone have the granted shares fund of funds? If I had to get granted shares, that's where I would go. It's the same thing I said about Roundhill. I did it and then ended up selling it, but it wasn't WPay's fault. It wasn't WPay's. I mean, I bought it at the wrong time. WPay'd be great in a tech rally, I think. Just like YMAX is good in a tech rally. Lots of them are good in a tech rally, but I bought WPay at the wrong time. So yeah, that's so Tesla's doing better, obviously, right? Oh shoot, hang on. Is this? Let's do this. Yeah, TSY. So I guess you were joking about, or you mean it's just been free money lately? The past couple of weeks, I can see it being free money, maybe. But it's not looking really good there. But EDOG is your favorite foreign. Okay. Never heard of that. EDOG. Wow. The Alps emerging sector. The dividend dogs. Okay. So it's Alps. So maybe it's the dogs of maybe the dogs in Europe, the European dogs. Oh yeah. Heck yeah. Okay. European value. Man, it's such a great time to be an investor. I mean, in the old days, you used to, and I'm talking 6 years ago, you'd go on there and you'd see, Bill Ackman or somebody talking about, oh, we're looking at emerging sector in Europe, and and we've got our positioned and or whatever. And nowadays you can position yourself. I mean, there's so many ETFs out there that do hedge fundy type stuff. You can position yourself. There'd been no way to get a dogs of the Dow, a value strategy going in Europe prior to 10 years ago or something, before the explosion of ETFs. I mean, there may have been a few ways. There's probably a closed-end fund or two that do something like this and have for a while, but this is just great. So I wanted to figure out, okay, I want to figure out what this really is. And it says, I want to see if my guess is right. It's the Dividend Dogs Rules-Based Index and 10 Give Investors, a means of tracking the performance of the highest dividend-paid stocks in the S network. Okay, whatever that is. S network, Emerging Markets Liquid 500. So now here's my answer. Here's my question to that. Let's search for that. And Verify, Bunny, Alps Funds. Well, that's where I just was. Well, I was just hoping to see what's in the. Oh, this is pretty cool. Boy, this is a good looking prospectus. This is a good find, Marcus. I mean, one of many. Marcus is obviously great researcher and has a knack for uncovering these things. Wow. So yeah, I like that. It's just a good looking. It's a good looking perspective. It says starting with S network work, liquid emerging markets 500 means that EDOG draws from a robust use of stocks, blah blah blah, liquid, high market cap. It says whose domicile, speaking of the stocks, and primary exchange listings are upper middle income and lower middle income countries. So not developing countries. So I guess upper middle income might be like Italy. I'm just thinking Germany maybe. And lower middle income might be like, so well, let's see. Here they are. Let's just see if I was right. Netherlands, Colombia, Czech Republic, Indonesia, Peru, Brazil, Hong Kong, Malaysia, Chile, Hungary, South America, Mexico, Luxembourg, Turkey, Thailand, Philippines, China, United States, India, and United Kingdom. But the United States allocation is really small. I mean, the big ones are Netherlands, Colombia, Czech, and Indonesia. So my guesses are wrong. Italy's not on here. Germany's not on here. Dividend yield is a proven factor to screen for value. And this is the whole dogs in the Dow strategy. And like I always say, there's tons of research, tons of books been written about this. The dogs in the Dow have been around at least since the late 80s. And a lot of people, I know people that do this in their own, that do this and love it. And every year they choose new ones. They just look at the paper and or whatever. Not the paper, maybe the paper, but they look at they just choose the highest dividend yields at the end of the year from the Dow, and they choose the 10 highest and buy those in equal proportions. So these guys do equal sector rating. Yeah, this is a good one. This is a really good one. Good call, Marcus. Good call. Oh, we got a new commenter here. I don't think I've seen you around here before, Leon, but I appreciate you being here. For Granite shares, I would go for maybe a fund of funds auto callable. Yeah. So Granite shares come out with that auto callable. Did they come out with that Tesla auto callable? Wonder how that one's doing. I mean, it hasn't been out that long, and I don't like switching windows, so I'm not going to look at it. But yeah, but what is? Somebody give me the ticker of the Granite shares, their stock, their. Yeah, Marcus is giving us more details. He's saying it holds the top 5 companies from 10 different sectors. So it's separate by sector too. Nice. And I'm sure you meant the top 5 dividend yielding companies, right? Or according to whatever in the screen, the top 5 that meet their screening factor. So there is it XBTY? No, that's their XBTY is but it's something like that. It's let me just type in Granite shares. Oh, they have a lot of TLA. Oh no, yeah. Okay, I know TLA. I was talking about the fund of funds with stocks. The one with stocks. I just got a text. Okay, I just got a text. All right. I just heard about it. I haven't even checked it out yet. I just thought we could check it out. There's so many, I don't know that I'll find it. Oh, here, okay. Switching lanes. Will from Granite Shares told me about this 2 years ago when he was on the station. It always sounded interesting, but it was kind of low yield, if I remember. But it's at the time, it's what they called their U.S. high income. I think this might be another value play. Going back to speaking about value plays, we'll come back to the fund of funds. But going back to speaking about value plays, we have this Granite Shares HIPS U.S. high income, pays 10.79%. I forget how they do it. It wasn't options though. It was a stock portfolio, I believe. Yeah, it's not. It was a stock portfolio. So they have. Looks like they have some companies that maybe aren't public, some limited partnerships and stuff. But you know, 1079 is not bad. So let's run it against some of the ones we're looking at. So HIPS, and let's run it against SDIV or something. It's not going to do as well, it doesn't look like. But anyway, it's another one in that sector. All right. Oh, okay. There's my thumbnail. Don't look at that. You guys didn't see that. Don't look. Don't look. Don't look. Don't look. Let's see what AI says. And I'll get to the stuff you're talking about. All right. YBTY. I said XBTY, and I said it's something like that. All right. Let's see how it's been doing. Let's compare it against WPay. And see, this is an example of content I might make. This would be great content. I should go do this after I get done with my other thing. Just compare XBTY or YBTY against YMAX and against WPay. That's a good one. And those are the kind of videos I like to make, or that I'm good at making, where I think I can add value. That would be a good one. I'll probably forget it. All right. So speaking of forgetting stuff, let me look over here. Oh, shoot. Well, okay. So now we're back in the growth investing lane, but here's YBTY and here's Y or YMAX. Well, that is a good look for YMAX, but YMAX is not levered. XBTY is levered, so I'm not going to instantly write XBTY off. It's like I always say, it's too early to tell if YBTY. It's too early to tell if YBTY is a bad fund. It hasn't even been out for a fifth of a year, and it's you know, and it's been out in a time, I don't know, and it's levered. I mean, it may be a bad fund, but let's see what it does to that does to a rally in tech. So let's see how it does against WPay. And then Jeff is saying over there that he sold his. You sold your. I want to read Jeff's comment next. I'm not forgetting about it, Jeff. I'm there. So yeah, WPay looks a lot better than YBTY. Have we run WPay against YMAX lately? I mean, I can tell you the winner's going to be in a bear market. YMAX will win, in a bull market WPay will win. So I would think, because of the leverage. And so we have WPay at 9,300, starting with 10,000 a half a year ago at inception. WPay is down 15. YMAX is down 19. Probably YMAX has paid a higher dividend, but I don't feel like figuring it out right now. Okay, so back over here to Jeff's comments, or where the heck did this thing go? So it's sharing this screen. What in the heck is going on? I freaking. All right. Past couple of weeks, Jeff has been selling out of his TSYY to buy NVYY, but pulling reins in this week, like slowing down. Whoa. All right. Yeah, the single stock auto callables, I can't even imagine, but that'd be a good thing to do some content on also, but I don't even know where I'd start. So that's why I've never really done much content on auto callables. I try not to do stuff where I try not to talk about stuff I don't know about. on purpose. I talk about a lot of stuff accidentally that I maybe, but I'm saying I tried, if I know I don't know about something, I try to stay off it. Okay, and A and V is NVIDIA. Okay, so let's look at this. So A and V is the NVIDIA auto callable. And the Tesla one is TLA. Now, auto callables are kind of complicated. I think everyone in here knows what they are. There's only 10 of you guys here. You guys are all commenting. And it just hasn't been around. I mean, they just came out yesterday, probably, right? Anyway, it's good to have choices, though, right? All right, guys, I've been going on too long. Like, there's only 10 people in here. I think I bored everyone and they left. Not like I'm doing this for the clicks. I like to talk to you guys, but anyway. All right, Skeptic says we got to master them. Max auto callables are the new retail. Yeah, I know, no doubt at all. No, I'm not saying they aren't here to stay. I'm just saying I don't know. I don't have much to add to the conversation, you know, because so here's my strategy on that. Like I say, there's lots of stuff I don't know about. Like I put it all in the daily factor, and then I can darn sure evaluate the results, and we could talk about those. But I like to make videos about the mechanics of these things. And so you aren't going to get a mechanics of auto callables with me. Yeah, well, thank you. Thank you. I think you guys are all junior experts. All right. Yeah. Hey, don't forget, like and subscribe. Don't forget, not financial advice, consult a professional advisor. I don't know why this went purple. What in the heck is going on? Why is it purple? Oh, I think it's, oh gosh, darn it. Okay. I'm just figuring out how to use this darn thing. Now it's, well, whatever. Okay, so hang on a second. I guess I could do this too. All right, guys. Well, thanks for being here. Like I say, not financial advice, consult a licensed planner. If you like to donate to the station directly, you can do so there. You can also like and subscribe. I will talk to you guys in Discord. Be watching for that 3 o'clock video. I'll make it. I want to make it after the market's closed, so it'll be 4 o'clock, but 3 o'clock my time. So make it till after the market's closed. Maybe I'll even stream it live, and we can react live to it or something. Or maybe I'll show it as part of the afternoon report, and then go do the afternoon report immediately afterwards or something. I think that'd be fun. So I think this could be a good video. You guys, please check it out. And outside of that, barring any last minute questions, I will talk to you guys later. All right, guys. Thank you so much. Have a great day.